Hello and welcome back to The Note. Let's talk about China today. There's been great excitement about the package of reforms announced by the Chinese leader Xi Jinping at the Communist Party's plenum last month. But there are still also many concerns about whether they can really unravel the many problems that many people are worried about with China and its ongoing economic growth. With me now to discuss this very important topic is the Senior Economic Consultant to UBS, George Magnus. George, thanks for joining me once again. If we start by taking a look at perhaps the biggest headline grabber in the proposals, they're going to relax, as I understand it, the one child per family rule. How important do you think this actually is? How much will it really change behaviour?
I think this is more about rights than it is about reproduction per se. And of course it's one of the measures, important measures actually, which the party has announced to try to make itself more popular and increase its support and legitimacy with citizens at a time of very, very important change. It's a humanizing factor. Right. So whether it changes reproductive behavior very much, I think, is a moot point.
Okay, I mean, and if we look at this chart, the one-child policy comes in at a point when the big dip has already happened. It's very startling to see that China now has a lower fertility rate than the US or the UK, but it's still higher than quite a lot of other countries, as I understand it.
Yes, it is. I mean, and it's about 1.6 children per woman, which is it's definitely on the low side, and in the richest metropolitan areas in China, for example in Beijing and Shanghai, the fertility rate is about 0.8, which is about the same as it is in Hong Kong or Singapore. So when people get richer and an income per head in some of China's richest cities is the same as it is in Portugal, there's a very certain behavioural pattern. People have less children.
Right. Once they can afford to have more children, they decide to have fewer. Now, let's move on to perhaps the critical issue for most China watchers at the moment, which is credit, which common sense has suggested is excessive and dangerous for a long time. These are charts that came from Tao Wang of UBS, suggesting that something unsustainable is going on. Is the reform package really going to affect the growth of credit in China, do you think?
No, it's an interesting point is that for all of its array of proposals, we don't know, what the implementation hit rate will be, but for all of that, nothing was actually said about credit or about how to tame the credit genie that's been let out of the bottle in recent years. That kind of discussion is quite separate. Actually, it's the most important issue for investors actually over the next year, much more so than the reforms themselves. And of course, this chart indicates quite well how since 2009 in particular, the growth in credit, including shadow banking credit, which is a lot of it is off balance sheet, has actually exploded to about 230% of GDP. Nothing was said in the plenum about this, but it's actually the most important issue, I think, over the next year.
Okay, now that really sounds quite alarming. If we take another look at credit in another way, where we're taking a look at social financing and also what the market seems to think about it via the bond yield. As I understand it, a lot of confusion in China comes from the fact that local governments have as much autonomy as they do. Is there any way that political reforms could actually help fix the economic issues behind the supply of credit?
So local governments, as you say quite correctly, have been a key player in the growth of certainly the demand for shadow financing or off-balance sheet financing, but also state-owned enterprises as well. It's partly this sort of kind of juxtaposition of a regime or a government that wants to encourage financial innovation and try to preempt the development of market mechanisms against the issue that actually banks have shown considerable adeptness at basically circumventing controls and regulations. So that's why we have this kind of explosion really again in total social financing, which is the main credit measure. And of course this line of bond yields here is it's basically telling us how the Chinese, the People's Bank of China and the regulatory authorities are slowly beginning to try to restrict the growth of credit. how this this kind of conflict between wanting to encourage financial innovation and clamp down on it at the same time evolves, I think is going to be very telling in the next several months.
Okay, George, thank you very much indeed. Well, I'm sorry to have to say that ultimately there are still more questions than answers over this reform package. Evidently, as I think George has made clear, this is primarily about political reforms. The things that most concern us are to do with the economy. There are arguments to come over exactly how China brings its credit under control.